In this week's currency update, it's been another good week for the Australian dollar after a poor start. On Monday morning, we saw financial markets react badly to failure to reach agreement at a key oil producers meeting in Doha, and the Australian dollar traded as low as 75.94 in early trading. However, that low proved fleeting, and the RBA minutes on Tuesday revealed little additional concern about the recent appreciation in the Australian dollar, and RBA Governor Stevens, speaking in New York on Tuesday evening, failed to mention it. That gave a green light for the Aussie dollar to push up to and through 78 cents, and last night we saw a high of 78.35. Now, a key factor driving strength in the Australian dollar this week has been continued strength in industrial metals in general, iron ore and steel prices in particular. From lows sub $40 in January of this year, iron ore last night traded above $70. The strength in iron ore prices is being fully validated by a sharp rise in steel prices in China. Rebar, steel used in construction, late last year traded close to 1,900 yuan a ton. Last night we traded above 3,100. The last time we saw rebar prices at these levels was mid-2014. Rebar futures in China are up about 15% so far this week and 30% so far this month. Now, some of this strength in steel prices in China is likely being driven by a pickup in speculation in Chinese commodity futures. However, some will also be related to increased demand ahead of plant closures in the Tangshan region as the Flower Expo commences at the end of this month. That suggests we should see some softening in steel prices as we move into next month. Now, next week, the focus is likely to shift from the Tangshan region in China to Washington in the US. The Federal Open Market Committee is due to release its policy statement on Wednesday, and markets will closely watch to see if the level of concern about global risk is falling. However, Q1 GDP will be released in the US on Thursday, and that's likely to emphasize slow growth, limiting the extent to which the Fed can sound more upbeat on the outlook for the economy. Within about 12 hours of the FOMC outcome, we'll also have the RBNZ, OCR, and the BOJ meeting. The recent earthquakes in the Kumamoto region in Japan have increased the risks of policy action from the BOJ. This will be a key focus for dollar-yen on Thursday next week. With a likely soft Australian CPI to be released on Wednesday, we should expect increased volatility in foreign exchange markets over a very busy Wednesday and Thursday next week. In the short term, it does look like the Australian dollar could extend further, and a period of trading above 78 cents seems likely. It's possible we may see a move towards 80 cents if Yellen continues to signal concern about global risks. However, we don't think this period of strength will last. As the Fed moves to signal higher rates and commodity prices start to weaken again in the third quarter, we do expect to see further weakness in the Australian dollar. These are all factors we can talk about in next week's currency update.